Okay, good morning, everyone. Happy Friday. Today is August 28th, 2026, the final Friday trading day of August. Today is also Jackson Hole, where new Fed Chair Kevin Warsh will be speaking at, I believe, 10 a.m. Eastern Time. This is going to be his inaugural speech, laying out his vision for the future of the Fed's actions. So all eyes and ears and will be focusing on that speech. That may result in some action in price today. So just be aware of that. Don't have to be fearful of it, but just be aware of it. Being, what's the saying? Being forewarned is forearmed. So just being mindful of that. All right, before we get started, again, we'll satisfy the regulator's requirement, NFA compliance rule 2-29C subparagraph 1. Again, trade with money you can afford to donate. Past performance not necessarily indicative of future results. Too bad we couldn't. Too bad we couldn't take a donation write-off for the losses that we produce from trading. Wouldn't that be good? Unfortunately, that's not the case. Okay, so let's take a look at where everything is here. Today begins a new cycle. Let's take a look at the cycle chart. We saw yesterday, just as a quick review, we saw the NVIDIA gap up, right? So jumping the creek, JTC, jump the creek. So that's a Wyckoff term. So that was the creek there, and then the creek got filled back down to the 7,700.05 zone, and then the basically pulled back, consolidated, right? Absorbed those sellers, and then obviously on the way up. So today's line in the sand. And again, apologies for the daily trade strategy actually not going out. It was still stuck in the draft folder, so I released that early this morning. Typically that is released at 9 p.m. So sorry about that. So 77.30 is line in the sand. The initial targets 45s through 55s, and then 65s above, and then like through 70, 71 area. All right, so right now just basically up to the initial 45-55 zone, and then as we enter today, we'll see how that plays out again with Chairman Warsh's speech in about 40 minutes or so beginning. So see how that plays out. So low pivot down here right against the 30s. That was also VWAP, RTH VWAP yesterday. So take a look at that chart. You'll see corresponds to around the 77.30s. Bullish reaction would be holding this a little bit upper area here around the 37s or so. Looks like. So you got like 35s, call it, right? Again, I like to round things off. 30s, right? And then down here near this pivot, right? So call that 25s, right? And then down here near the 15s, right? So again, you can lay out these levels pretty succinctly. So again, as we mentioned yesterday, how we're framing out price action, so framing out the pivots here, so we're above, these 35s area. So that would be any pullbacks here would be at least anticipated to elicit a buy response, right? Doesn't mean it will. It's just the kind of the way we're thinking is like, okay, price pulled back there, it held and moved higher. So if we get a move back to that area, a normal or an assumption would be that area probably should elicit a buy response yet again. That would be the inference. And so when you make an inference like that, here's the thing. If you don't have an inference, if you don't have an assumption or a hypothesis, if you don't have it, how do you compare what is happening to what is expected or at least inferred may happen? You can't have a comparison, right? Because you haven't laid out anything to compare against. Does that make sense to everybody? Think about your own world outside of trading. We're always making assumptions and inferences about things all day long. You may not even realize it because most of it happens subconsciously. But you are always making inferences, judgments, comparisons. Because they're done subconsciously, you just go about your day and don't even realize that's happening. What we're trying to do here is bring those concepts that happen subconsciously to your frontal cortex, right? To the surface, being mindful of them, making those inferences and assumptions, then actually doing, working the comparisons. Is it happening as inferred, as outlined, as assumed, or is it not? Is something else happening? Is it holding? Is it showing the response that we're not predicting but anticipating as an assumption, as an inference? And if it is, then you move to the next step. But that's all part of the ODA loop, right? So your observation, orientation, okay, you're looking, you're watching, you're making those assumptions, inferences, you're doing those comparisons, you're asking those questions. And then depending upon what type of answers that you're receiving, right, from those observations and orientations and the questions, then you may move into the decision action cycle. If this, then that, based upon your observation, orientation, and again, the answers that you're receiving in real time about the price action unfolding. Make sense to everybody? This is the ODA loop in action. These are the questions, observations, the things you should be doing consciously. You want to bring it to the surface. You want to ask those questions, not trying to guess, wait for evidence. Waiting for evidence, I know, we want to get in there as, I want to be the first one, I don't want to be the first one. I want to see evidence of others that are much stronger than I show me that entry, long, short, whatever it is, has greater potential to play out. John writes here, two of mankind's favorite games are based on judgments and inferences. One, I am right and you are wrong. And two, it is not the world according to X, fill in the blank. Yeah. All right. So what you want to try to do for yourself is work on mastering that aspect of your thought process. The more you can focus on that, maybe something to be thinking about, in the upcoming month. We were talking about focusing on something, maybe focusing on that from a mindset perspective, and also maybe focus on something from a technical strategy trading perspective. Maybe meld them together to formulate, your actions. All right, just throwing things out there for you to consider. Keep asking yourself, questions. If you find yourself impulsively wanting to enter a trade impulsively, and you know whether or not it's an impulsive reaction or not. And but ask yourself before you take that trade, are the conditions for that trade what I'm really looking for, based upon historical evidence of trades that have succeeded. Okay. Okay. So something to think about, something to chew over. End of the month. Let's see what happens going forward. Okay. Pre-opening here for anybody that was in on the 810 pre-opening. Again, that has played out so far to take profits. We have a staged order here on the A4, but has not triggered yet. Right, so the early 810 winner winner chicken dinner. And we'll see how the day goes. All right, any questions, comments ahead of time? All right. All right, let's have a good session, and slow and steady. All right, dingity ding ding in just a moment. Mark will be off and running, and let's see how the day plays out for us. Again, 810 is working on the management. A4 has triggered. We'll see how this opening plays out. All right. If you are waiting for the 5-minute opening range, great. If you're already in and based upon pullback into the discount 89, great. You're in control. You're in control. John, you have Sierra chart, right? So in Sierra chart, uh, in sim mode, okay, you have to have the order status turned off. Where is it? Where is it? Where is it? Where is it? Order status. Oh, it is off. Really? Do you have the trade in simulation mode checked? Make sure you have all the check boxes that I have here. Really? Uh, Send me a snapshot of your settings if you can when you have a chance. Let's go there. When you have a chance. All right, so somewhat of a neutral opening right now. We do have just kind of about a minute and a half for our opening. So we have an opening, not really a gap, maybe a slight gap, but in range opening though. So within the prior range, so not really a. All right, so I'm being patient here. Again, long side at the moment anyways. All right, slightly favored, only because of the configuration at the moment here. Right. Let's see if we can get some acceleration. Again, I think everybody's just kind of hanging out, waiting for wash. Playing the waiting game. Do they release his speech ahead of time? Or is that a secret? Yeah, it's okay, so it's live. So sometimes though they release like, an outline of the speeches, but if it's going to be a surprise to everybody, then all right. So again, long side A4, A10 is the trailer is out even. Again, remember that should not be a loser. And we're two scale outs on the A4, and it stops at break even level now. Standard management. No, I don't think the truth account has it. I don't think he'll release it to them. Does anybody use the theoretical average as part of their management? Yeah, I know you do. Okay. So what's happening here, just in terms of the theoretical average, all right, it's up here in the top right. I mean, if you don't have it on your screens, you can put it on, right? It's up here, theoretical average. So what this means is your initial cost, okay, your initial cost, and then as you know, TP1, right, TP2. So what happens is when you scale out, your cost of position, okay, moves down. Everybody should be aware of that if you're not. And then as you make another scale, the cost of position again moves down again. So what happens is the balance of your position, okay, this is your average cost, right, of the balance of your position, okay, or actually of the overall position. Okay, so it's called the theoretical average. So that basically is the break even level. Okay, so that blue line, right, moves down. So as you'll see here, watch again, watch this. This is going to trigger, should trigger the take profit 3. Yeah. So there's your TP3. Okay. Now look at the break even level up here. It went from 42, right, to 77.30, right? And what happens is the blue line there, okay, moves all the way down. So that's called the theoretical average. So when you start scaling out, you can see exactly visually where your cost, or via text, okay, via text where your cost is on the position. So it's an easy way of just knowing where that break-even point is on your position. So it might be something worthwhile using. I use it. All right. Now, typically when I have 3 scale outs like this, I'll just now move my stop to break even totally, right? And just now that becomes the runner. And we're going to let the market, if it's going to run, however far it's going to run, let it run. So that's the idea of the theoretical average. I used to have to calculate that, manually. And I said, that's just a pain in the behind. So I had it installed few years back, actually. So if it's not something you've discovered yet, right, could be a good discovery for you. All right, John was using that, but he's an all in and all out. Okay. Rom, check your. All right, check your. Hold on a second. Check your time zone settings. Go to general settings. Go to time zone settings. Make sure your time zone settings are New York. See if that has any effect. We didn't check that the other day. All right, up to the 55 target area that we had on the daily trade strategy. Generally, the options area has a positive gamma. Right now, anyways. Yeah, I think the definitely the theoretical average is useful. I tend to build into a position and scale out, so it definitely can be helpful. Oh, hey John, first thing I noticed on your control panel, select A10. You have A4 selected. That would be first step. Oh, okay, okay, all right. My bad then. Stand by. Oh, I thought it was the A10. One sec. Let's see. May want to. Oh, it did. Oh, okay. Oh, okay. Let me just one other thing I wanted to check. You may want to check the time, the start time and end time. Make sure those are congruent with your. Okay. Did you change that after or before? Oh, okay. So there's another thing also. Well, there's a couple things there. First, time. Yeah. Okay. Okay. So that may help. That may do it. And then the other thing is whether or not you want a dependency against the, with the A10, like for an end reel. If you don't want a dependency, um, it doesn't look like you want that. You just keep that off, and it'll just flip flop every single one. You may want to just, yeah, well, actually, you don't need that setting if there's no dependency. Okay. Yeah, once you have it running, at least then you can start messing around with the various settings to see if how exactly you want to have that work for you. All right, little pump back into the range. Nothing exciting. Only up to about the 55 target there, and then fade back in. So now the next thing is Jackson Hole beginning soon. Hold on a second. There. What did it do? It doesn't look like it's all out. Not sure what that did. Oh, you know what I'm going to do with these opening ranges? I don't have them set that way, but I'm going to set them to. I'm going to set them. See, I'm using micro. I'm using micro data. I'm going to set them to. Well, it'll be for when I come back. I'm going to set them to ES data and then trade the MES symbol. Sometimes that micro data gets funky. I want to convert everything to the mini data, and then if we're going to trade the micros, use mini data and then micro trade. Something gets funky there. All right, if you want to watch Jackson Hole, that's one YouTube channel. And here we go. Market's reacting already. I think there's a 2-minute delay on that. They never give you everything live. It's just a delay. Yeah, DLMB's on deck, 6250. If you're gonna play that. All right, so he's talking already. Associated Press obviously has a delay. Live is not live. All right, I don't have him, so I'm not listening to it. So I don't know if anybody else is, but I'm not listening to it. So I'm just watching price and doing my thing here. Yeah, robbery. Pick your pocket. All right. So again, I'm not listening to Warsh. I'm just again paying attention to what we're doing on screens here. Obviously, we got the bearish shift there, so out of the opening range area. All right. So again, we get this break through the opening range low, right? And then we get a pullback here for a premium against the opening range low. All right. Obviously, very clear directional influence here. Okay, there's your premium. So that's the one, right? You need to have been taking if you were looking for the directional trade. Again, I'm not listening to Warsh. I don't really give two, you know, bingos of what he's saying, right? That's information I don't need to necessarily need to process. The market's going to process that information live for you on screen, right? Listening to him is not going to make you any dough. Right? Looking at the price action, looking for, right, seeing what happens. So again, walking through the process here, right? We have opening range low, broke opening range low. We got a shift, right, in the EMA. We're looking for a pullback into that EMA. What are we looking for? We're looking for premium, right? We see premium, execute, okay? Execute. This month's password, execute. You do that. Nothing more to think about. John got the 40s, okay. 40s, yeah, that was good right there. Boom. So again, for those of you that did not take it, again, you don't have to say whether you did or you're not. I'm not here to critique whether or not you did it or not. What I'm here to do is to keep instilling you the thought process, okay? My goal is to make sure you're understanding the thought process step by step, knowing what to be thinking about, focusing on whatever is necessary to focus on, not outside, stuff. Oh, I missed it because I was listening to Warsh or whatever. Okay, learn if that's what you did. If that's what you did, I'm not saying you did it. I'm just saying use an example. If that's what you did, just know that that's not gonna get you where you want to be. Maybe I shouldn't have posted the YouTube channel. Sorry if I did and it distracted somebody. Maybe I won't do that again, right? But that's what you do. You're saying, okay, what are the key parameters, right? So again, our opening range. So now even before any of that, you're saying, okay, if, right, then, right, else. We walked through the OODA loop before, right? OODA there. Observationary is making some assumptions and then a decision. So the assumptions would be if price, right, breaks through the opening range and holds. Okay, so you can see it broke through the opening range here. It didn't hold, came back down, broke through the opposite side of the opening range. So we're waiting for evidence for the market to hold above or below as a reference. Does this make sense to everybody? Please raise your hands if it does. All right, walking through the thought process of it. So use an opening range, okay? And then you're looking for, okay, what's next, right? What, what is the lean? Right? Maybe you want to use the 89 EMA as a proxy, right? And then what, right? Looking for a premium, okay? So that's the setup. That's the thought process, right? So OPR break. Okay, so the OPR break directionally, if then else. So if the breaks and holds, then looking for, right, what's the lean directionally? It's all part of the observation orientation. What's the lean? Okay, and then what am I looking for? So you see all these things are happening in real time, but you need to be thinking about these, preparing for them in advance. Right? It looks great after the fact now, doesn't it? Okay, use it as education, use it as preparation, use it as, a template in terms of thinking about it. But once the components are there in place, there's nothing more to do but execute. And of course, manage accordingly to your risk tolerance, etc. That should have all be prepared for in advance for yourself. So I'm not essentially going there to talk about that. I want to keep drilling in the thought process, the step by step, the OODA loop. The more you do that, it's going to get better and better. But you need to do it. So that's the step by step on this one. Just because price pushed above or below a reference level, you want to see it respond properly. So the early move above the opening range, you could say, okay, it's above opening range, but then it needs to pull back and hold above opening range if that's the direction that the market is intending to go. Obviously, remember how we said give it some time. We've got to give it a little bit of time to unfold, but you can be thinking that way. Hey, if it holds above the opening range and pulls back and holds, again, you kind of create that scenario. And then if there's a signal, because we really want a signal, proper signal, then at that point, if all those things come together, boom, just execute it. Right? Since it didn't do that scenario to the upside and reverse down below, reverse the process. But you need to be nimble to reverse the process, right? This is where that, observation, being able to be flexible on whatever the market is showing us, not what we, when we're looking for a particular thing for the market to happen, it's just a scenario. It doesn't mean that the market must do that. You need to be flexible in the thought process, saying, well, if it does this and it does that, right? So the if then type stuff, and it gives me the signal, boom, I'm gonna execute it. Whether it works or not, again, that's going to be up to the market, right? But in terms of how we're viewing it and what we're looking for, that's up to us. That's within our control. So everything that's within our control, is essentially can be outlined ahead of time. And that's what we want. We want to do this stuff and outline it ahead of time. So we're then prepared. All right, good job. And again, maybe that's an area that we're discussing could be one of the focus areas for you up and coming, through the month of September, right? Right, what actually is very useful as a self-helpful tool is, for instance, take this example here. This is a real good example, very clean. You have the opening range, and then work on that. If the market holds above, what would you be looking for? So write it out. And if it doesn't hold and it reverses as it did, okay, write it out. What would you be looking for? Okay, these are the things that will absolutely make uh, higher progress. Yeah, so John is saying I had a BLT line from the discount arrow at 51. So what he's doing here, and I think John outlined what he does, right? So he's taking, say, this discount arrow, and what he's doing is he's drawing a horizontal line there on his charts. Right? So price is above that area, but he's referencing that. Price gets through that area, that's a short signal for him, right? Would I be correct with saying that, John? And that's the Barbara Lopez trade, the BLT. 100%, he says, okay? So then you stop, right? And what happens with these things, what's interesting, and again, I admit I need to probably focus on BLTs a bit more myself, and I don't, but I'm seeing there's a lot more, potential in those, because if that fails and reverses, the reversal tends to be fairly quick, very little heat, if any. So that, again, maybe explore the BLT type of trade, going forward. Do some work on it, practice it, really understand it, outline it. But this is what John says he does. He draws a fat yellow line. And why does he do a fat yellow line, or whatever is a hashed line? Because he needs to have it stand out, you know, right, on the chart. It can't be a little thin line because you're not going to really see it. So make it stand out. Like what I've done here on the EMA, I've fattened that EMA out recently, just to demonstrate that if you're going to be focusing on something, make it larger so you see it. Things like that are what's going to, help you focus in on, zone in on something. All right, back to the middle, back to neutral land. So like this discount here, let's zone in on this discount for a moment. That discount there, is that, well, it's past tense now, but was that a good discount to consider? It is a discount. Was it a good, was it a high quality discount? High quality. Quantitatively, it's exactly the same as any other discount. How about the qualitative nature of it? It was a high quality discount to consider. So we want to consider it. So let's work on that. We want to consider it, right? Because it is a discount, right? So I'm seeing a discount. I want to consider it. Now, whether or not it continues to become a high quality discount, it's kind of it's not really a trick question. It's just an open question. Whether or not the discount becomes or develops into a high quality discount opportunity, right? We have to let a little bit more unfolding happen. Would you agree, Steve? Needs a little bit more unfolding. But it is definitely one to consider. Say, hey, there's a discount there. It's a pullback, right? You got an EMA. All right, we got a discount. Okay, so you guess so. So that means you're not sure. All right. Okay, so what I'll then offer you is I would wait for some additional unfolding. What's the unfolding? I'm looking then for, well, we know it failed, but that's not the idea. Is we want to walk through the process. All right. So we got this move up, right? We got the pull back down again into the fair value zone, etc. Right? We do have a discount, so all that is part of the process, part of the unfolding, the development of it. So what we want to see, all right? So remember the idea of what we really want to see. We want to see any of that pullback and the EMAs, the 89 and the 34s here, right? Begin to do what? Stabilize, right, and hold. And then we'd want to see the bar structure begin to also follow along with that strengthening condition, right? So that this whole structure, as I'm outlining, if it turned out that way, would be more of a strengthening condition, right? So we got a pullback. So this move higher, obviously there were buyers there that pushed it up. But when it pulled back, we want it now continue to strengthen. That's what we want to see. So yes, the discount is there. It's part of the unfolding. But now I'm not just going to take that discount in and of itself, right? But I do want to see, the rest of the structure begin to continue to strengthen. Yeah. So in a case where if you decided to take that, right, then on a break of the lows there, yeah, you'd want to adios. All right, because it's not developing as you want to see it. So, the best developing, you'll notice, see, this is where you want to do as part of your comparisons, right? So we do comparisons. So here, this is a good comparison. Let me just outline this comparison, right? So we just discussed the one on the right, that it did not develop any further, okay? So as Steve said, if we have taken that trade out, you want a GTFO. It's just a didn't develop, busted, get out of it, reassess. All right. So what we want to see is this. So something very similar over here on the left now. We got to move up. Let's compare these. Right. So we got to move up. We got to move up. Right. Similar. Right. Okay. We got a fairly decent pullback down. Right. We got a fairly decent pullback down. So to this point, they look similar. Right. Very close. Now notice on the left, what happened? What do we want to see, right? We got a discount. Well, we got a discount. So that, again, to this point, everything is the same or very similar. But you'll notice over here on the left, what happened? There's your EMA into that rising structure, right? The EMA river. All that was building, right? Was developing more positively. And you still had plenty of opportunity to enter the trade after the discount signaled. By the way, there is no requirement on any discount or premium that you enter the very next bar. No requirement. The auto execution will, but if you're doing it manually, there is no requirement that you get in at the very next bar. As a matter of fact, in most cases, and particularly if you're doing it manually, you can actually get a better opportunity, better entry if you are doing it manually, okay, but following the same kind of protocol. So I just want to outline that. But so now you'll see the difference, all right, that once we get a discount, in this case similar, the one on the left is what we want to see. So again, mark this time of the video 10:34, right, on 8:28, or take a screenshot of this and write out something for yourself, note about this is the type of development of a discount. And what's nice about this is they're very similar in structure as they were unfolding. One played out because it developed more. The next one did not develop. So if you wait a little bit for some further development, again, a little bit more information, and it's not about getting the lowest price or the highest price. Some people like to do that. I need to get that price. Well, God love you if that's the case. I don't care. All right. I want to get the structure. I want to know that that's developing the way in a very similar way. Okay. So knowing what to be looking for in terms of the development of it, and this is probably a fantastic example side by side. So the market is the best, you know, educator for that. All right, so hopefully that helps. Again, it's all about like, why should I select one versus another? They're both discounts. They're both mathematically the same. Quantitatively, qualitatively, they are different. So hopefully seeing that and understanding how they develop helps you begin to make a better informed decision about one versus the other. I'm going to tell you one thing today, guys. This is probably going to be the best lesson today. That comparison. All right, back to real time. And Steve, by the way, thanks for responding to the question. All right, don't be afraid, guys, to respond to the question. It's particularly if you're unsure and stuff, because this is where I can go into some greater detail about this stuff. All right, so we're back to the long lean. There you go. Thanks, John. All right, so John's outlining again the BLT. In this case, he uses green dashed lines. But again, right there on the, so here's your premium. Okay. So remember, even with premiums and discounts, they're actually two-sided trades. So technically on a premium, we are looking for a short, but premium by definition is, John, represents, putting him on the spot, represents strength. So we want to sell strength in a down direction. So as we saw earlier, oops, wrong one. So as we saw earlier, is your premium. Again, premium equals strength. So we have temporary strength in price, but in a down directional move. Okay. So here's another good comparison. So if we have, take this premium over here and then work in the other premium that John just outlined. Let me just bring the chart in. Okay. Now this is a, okay, so this is a second lesson. Comparison. Comparative lesson. So if a premium equals strength, right? We want to do what? Sell premium right in a down direction. Okay, so I'm gonna shorthand it like this. So in a premium equals strength, so we want to sell premium condition in a down, larger down direction. So that's this right here. Down direction, premium, we want to sell. Because also now premium equals strength, we want to buy premium in developing strength. And that's equated to BLT. Okay, and that is this signal here. See the difference? There is no down direction there on that premium, is there? As a matter of fact, we have actually a higher low over here. We have a little pullback, higher low, and the market is beginning to move higher. But there's no down direction influence at this stage, is there? Unlike the prior one to the left. Okay. That then, because if premium does by definition mean strength, then we want to buy premium. So you could put a buy stop above the premium area. You could put it on the, that's on the strengthening one. On the declining one, right, you want to put a sell stop below to enter in direction. Okay, so another great example that the market's offering us comparatively, where we have a premium in a down direction and a premium in a strengthening condition. So if it's a premium in a strengthening condition, we want to buy that. How would we buy that? The structure would be the Barber-Lopez trade, the BLT. One of the ways. That clear? Okay, that is 10:40 2 on August 28th. Mark that on your calendars to go revisit this section of the video. Or take a snapshot and map it out for yourself. Two great examples, premiums and discounts, both utilizing a long setup and a short setup, or at least a decision to take a trade as it's developing, as we look for, and one not to take the trade because it did not develop. That was the discount. And the premium, a premium is a sell in a weakening directional move. It can also be a long in a strengthening condition. Up to you to decide which one and what the conditions are, but this is the outline of those conditions. They're not going to change. The conditions aren't going to change. These are the conditions. Now go back or go forward and find conditions similar to these and practice them. That's your homework. Not for today, for every day. And let me know how you make out. All right, well, we're back to the long side lean. We're above opening range. It is Friday, so we're going to maintain that bias for now. Very good. Yeah, you got a D level up there, so if you still want to play the D level, you're in the D level money box zone. All right. Guys, I'm going to mark off today as a key educational day. 8/28, 2026. Lots of good stuff. I don't need to fade levels. I need to identify levels that hold and then the shift against those levels. And there you go. And then just stay in alignment with them. All right, all right. Guys, are you as excited as I am about this? I'm excited to even talk about it and how these things unfold. Okay, and as I'm explaining it, I'm saying to myself, man, this stuff is damn good. You know. Okay. You know, I said, this is damn good shit. And again, the key is, you know, I don't have to fade a level. Just kind of wait for the shift and get in alignment on it. I mean, that's kind of what I've been doing for years, you know. And the great thing about it, these things are repeatable. All right. John's an addict. You're gonna be an addict, a good addict. All right. All right. This one's running away. So again, having perhaps taken that BLT, again, that could be a potential good long management at this stage. Perhaps also trying to consider, you know, going forward, you know, when you take some of these trades, you know, have one where it's a runner, try to manage a runner. The runners, what the runners do, very simply, what the runners do, they absolutely help pay for some of those annoying stop outs that we're all going to have. But when you manage it properly, when you have a plan, think about a plan for management. You know, maybe you do three contracts, even if they're micros. It doesn't matter if they're micros, right? So don't, you know, don't worry whether it's minis or micros. It's all dependent upon whatever your account size is, okay, and how you're going to do that. But the key is, you know, I want to trade three, you know, minimum of three contracts or a minimum of two, but ideally three. And if they have to be micros, if you want to stay within a certain risk parameter, do so, because it's the percentage of the move, not the nominal dollar amount. Everybody thinks about the nominal dollar amount. It's the percentage of the move. Yes, we want to pass evals and we want to put money, but again, it's the percentage of the move. The more you can, you know, work on managing a trading, getting in a position where you have a runner, right, to work with, then you're going to build that account balance up and then be able to move to the next level if you want to go from, say, a minis to a micros. By the way, everybody, these nano contracts that they recently released, I'm not even interested. Don't even ask me. Right? If you have to trade a freaking nano contract, you shouldn't be trading. That's just another ploy for the exchanges to get retail traders that shouldn't be trading because they really don't have the money. It's nothing more than the casino looking to drag in the unsuspected, you know, um, gambler. So don't even think about nano contracts. All right, so I'm assuming, obviously, you know, given the market's, you know, reaction and hold of Warsh's speech, all is good. Now they can go have their breakfast and mimosas. Ba-da-bum-bum-bum. All right, so also just a note, starting next month, when I come back off from vacation next week, okay, what I've been doing in August is this. I have been spending a great amount of time explaining in real time what is unfolding and what we're looking for, and I'm trying to explain in real time kind of the steps of thinking about the OODA loop, making some assumptions, hypotheses, watching it unfold in real time, etc., etc. So August's recordings are probably going to be the most significant recordings as part of your educational process. Be sure to go and watch, go to the members area, watch the videos for the core concepts and structures and so forth that you need to absolutely know. The August video streams are really there. You're going to start seeing in real time what everything that you've been watching on the educational video over the years that I have compiled in the library. You're going to see it unfold in real time. And during August, I've been explaining things in real time. And I will tell you now that it is very difficult for me. You can imagine the challenge of talking and trading at the same time. So come September, when I return, I will not be explaining as outwardly as I have been in August. We're going to be focusing on trading directly. I will be speaking, but it's going to be not to the extent of outlining step by step in real time. So be sure to watch the videos that we produced here during August. They will be most beneficial to you to be able to review those. That's why I was saying throughout the month, note the date and time of a specific area of the morning's recordings that you want to review. Hopefully you have done that. Otherwise, what you'll need to do is, if you're going to go review a particular day, then you kind of have to go and speed the recordings up a little bit to find an area that, so you're going to have to kind of search a little bit. But that's fine too, because typically when I start doing an educational presentation, I'm using the auto pen here that I have in yellow, so you'll start seeing that during those periods. All right, so come September, we're going to be, primary focus is trading the book, focusing on our various prop accounts and managed accounts that I manage. And again, everybody should be on the same page as we go through each morning as well. I'll be still saying the same thing, long lean, short lean, I'm looking for this, looking for that. All right, nothing there will change. The only difference will be I'm not going to be specifically outlining step by step. I think I've done about as much as I could do to keep you guys, on the proper side of the market and knowing what to look for. So it's up to each of you now to go back and do some work, practice. If you have questions, by all means ask. Don't want to discourage that. I want to always continue encouraging questions so you understand. And so if I'm able to, if I'm able to, if it's quiet, I'm able to address that in real time, we will. But I've been pretty much specifically outlining things without being asked, without being referring to a question. Okay. Well, yeah, I mean, trading does take priority, but at the same time, again, you need to know what to be looking for and how the structures are. Right? That's why I'm asking questions as well. Okay, through the process. So I want to find out, if you have, everybody has weaknesses in these, in what we do. Okay, so we want to try to address those. Be active about it for yourself. All right. Freddie says acceptance and rejection at specific levels is challenging for me. Okay. Well, again, that's something we can address as, we reach a level. All right. Just keep one premise in mind. Okay. And then this has been the driving force since day one. Staying in alignment. It's not just, a nice phrase. If a level is going to be accepted, bottom line is if an area is going to be accepted, it's going to stay there and chug along with volume. If it's going to be rejected, you'll see that in relatively short order. It trades there and then pushes away. So we don't have to try to guess whether or not an area is going to be accepted or rejected. We need to learn to recognize it. So if that's something that's in a, let's just say, deficient area that you want to get better at, okay, so as Freddie's saying, then put that on your to-do list, your A list. I need to get better at understanding rejection and acceptance and how to work through those areas. Okay, so that could be something we can all discuss as things unfold. Okay, and also to that point, if anybody has questions or areas they want to focus on with their own trading for the upcoming month, drop me an email. Don't send me a text message. Drop me an email so I have record of it, so that's something that I can kind of work into what we do on a daily basis. Perhaps even if we need to now, we're going to be heading into the fall period. Days are getting shorter already. We can have some workshops, Q&A workshops, right? One of those ask me anything type workshops. And then we can discuss those things. Of course, they'll be recorded. All right, so Danny says, Danny with an I. I find this an imprint in my brain I would like to keep while watching the trend evolve and how the CCI looks. Okay, so make that on the to-do list, and we'll continue to work in all those directions, all those areas. Oh, excellent. Yeah. Yeah. I mean, we'll just, again, we're just going to do more and more of what we do. right? We're really getting what was essentially kind of where I'm getting back to here, everyone, is, after as many years as we've been doing this, right? What I have found is the fundamentals that I laid out, 15 years ago, uh, are still the driving, performance. All right, staying on the right side, looking for those, first pullbacks. Bull and bear stackers are killers, right? If you know how to use them, they're not necessarily mechanical, right? So things like that will, continue to work on. All right. So if everybody's there, everybody should be in agreement. So spend some time reviewing the August streams. You can always go back; they're forever archived. Create your playbook. Some of you have already begun creating a playbook. If you haven't, begin creating your playbook. Write down specific rules. If you want me to review them, I will. Can help out, time permitting. But starting September for me, it's going to start getting to be a much more busy time for my trading book. Right, I have a new project, and I'm going to start working on that diligently after Labor Day going forward. So it's going to take lots of concentration. I finally get my charts the way I want them, the setup, so I can essentially conduct my business the way I need to do it in an efficient manner. It's taken me basically almost a whole month to figure out how I want to do it. Different configurations and stuff, but I think I got how I want it. All right, good enough. I will be around on Monday, final day of August. And like I said, what I'm going to do is uh, depending upon the day, I'll keep the charts up running as best I can. But it's probably going to be 2 or 3 days that I won't have any charts up whatsoever. So if you come in one day and the charts are not there, you'll know why. Right? Like I said, if anybody is interested, they would like to want to put their charts up and show their charts, etc., and maybe even speak to the group. It's always fun to do that. We can have Marlon make sure whoever wants to do that is set up properly. But again, trading is primary. All right, where we go at the 80s. All right, we hit 71. 71s was a cycle day one target. Remember, we're on cycle day one. So 71 up here, 77, 71. That was a penetration target. Here you guys on the NQ, 769 target, cycle day 1. Anybody notice about something about cycle day 1? Shallow decline, right? Line in the sand at the 30s, held beautifully. Look at that back test to the 30s. So cycle day 1 strength. Yeah, you can probably attribute it to Jackson Hole, but even if that wasn't the case, back test of those 30s, line in the sand, and then strong move higher. So upside targets, some targets anyways, fulfilled objectives. Again, you guys are in the D-level money box zone, so I mean, again, if you're playing that angle, you're there. All right, so outlining something here, right? So there is your discount. Oh, wait a minute, John just posted it. John, you're reading my mind. All right. And Barbara's in the room, so Barbara's trade here, the BLT. I'm getting hungry. All right, everybody see the BLT? Everybody beginning to recognize it? All right, strong move up, get a discount. Discount didn't really trigger. Remember, there's two sides of a discount or a premium. BLT short. Look at that, beautiful too. Look at where the discount is and look at the bid-ask volume ratio and look at the CCI when that happened. Both went negative. That helps strengthen, Barbara, correct me if I'm wrong, but that helps strengthen the BLT short play. So again, mark this time off, 11:12 on 8/28. The BLT short. Look how quick that develops. And if you think about it, it's just one of many trades. So what you can actually do, by the way, one of the things that I encourage is create a spreadsheet, or if you have some sort of tracking software or whatever, okay. Actually, I use. Well, let's just do this. I'll get to that in a moment. What you want to do is a basic spreadsheet, create it out, and what you want to do is you want to categorize your trades, right? Outline them as discounts, right? Premiums, stackers, BLT, DLMB, right? D-level money box. Whichever ones that you're going to be, focusing on, right? And again, just create a tracking sheet. It's actually, this is a good exercise for just to get some samples as you're looking backwards. So this would be an example where, and also when you're doing stuff like this, take screenshots and attach them to your spreadsheet. But better yet, if you are interested, I use a spreadsheet here. I'll put it up here. It's on the website. Trading Journal spreadsheet, and this has literally everything that you need. All right, you can scroll through the. You can. Here's the. I've used this for years. Now there are many other ones, probably even better. Some of them perhaps online, but this is something that I've used for years, and there's so many statistics that you can kind of once you put your trades in there again, they'll track everything. You can put screenshots in there. There's so much you can develop, and there's many other type of online journaling, as well. So if you're interested in even online journaling stuff, all right. But point is, you want to take whatever journal your trades, right? Categorize them, journal them, and then that way we can review them, over a course of a month, 2 months, 3 months, as you keep, collecting more trade data, then you have more metrics, okay? You have to start off creating some metrics, whether it's simulated or not. You've got to create some metrics. You just can't make assumptions. You got to start tracking. Every professional athlete, every amateur, or most amateur, schools, colleges, they track performance. It's not to, tear you down in a way. It's to encourage you, to build you up. But if you don't know where you are in terms of, your strengths and weaknesses, you're never going to be able to progress. If you do measure, hey, I'm good at this, I'm not so good at that, again, areas where you need to work on. But the only way to do that is to track. And don't just say, oh, I have an area I need to work on. Okay, I kind of know where I want to work on it. That's not going to suffice. Do what professionals do. Be a professional. How do I be a professional? Track your performance. How many of you were in grade school and you didn't like to get your report card? Well, you didn't like to get your report card because you did shitty that quarter, and you didn't want that report card, because you knew what was going to happen. You're going to get chewed out, probably by your parents. But really, did you get chewed out? Probably not. They're disappointed because they know you can do much better. So if parents were good to the children, they would maybe get you some help, some tutoring, wherever you need to become better. Maybe you just need to be motivated, whatever the reason. But the idea of tracking is to improve. And you need to track. So whether it's that trading journal spreadsheet, or some other spreadsheet that you may have, or an online one. There's a number of good ones online. Begin to track. No, no. John, I keep posting them up. We're not here to brag about trades at all. This is not what we do. All right. There's no one-upsmanship or anything like that. It's all to help each other show what again, if you show what you're doing, that's going to encourage. It's not designed to say, oh, look at him, he's bragging. It has nothing to do with that. All right. It's to help everybody get better, inspire. Say, geez, I haven't looked at the BLTs. You know what? John's been doing kicking butt. Barbara kicks butt on it. Maybe that's something I should pay closer attention to. Again, inspire you. That's what it's all about here, guys. It's not about braggadociousness or anything like that. Is that a word? Braggadociousness? Supercalifragilisticexpialidocious? All right, we got an 810, you guys. 810 starting to show some life back from the abyss. Maybe September will start performing better for us. We'll see. That's it. That's all it took. All right, take my lead. Go heavy. All right, so kind of in the consolidation phase right now after this move up. I don't know what that was about. Try that new word on your mole friend. Yeah, I'll get him, the little rat bastard. John, I'll connect with you. We'll set them up. So it looks like right now about 65, 67s, right, up to the 80s. So 60, call it 65, 80s, or 65, 82. So we can expand it a little bit. Whoop, whoop. Whoop, whoop. All right, two scales on the 810. We're going in. We're going in. We're going to break even. We're going break even. All right, guys, I'm going to be cutting off the stream here at 11:30. Does anybody have any questions, comments, reactions before I do cut off the stream? Still long of the A10 stops in place. Let's see if we can get a runner on that. Some upside targets are fulfilled, but we still have plenty of room to run. Let's take a look at the bigger picture here a little bit. All right, so this is our 60-minute chart. So still plenty of room to maneuver here higher. If it wants to push higher, we got highs to way up here into the 78, 20, 30 area. Okay, so still plenty of room. Nice rounding bottom though. Very nice rounding bottom. You can see how the value areas kept declining and then they started overlapping. Overlapping value areas like in this area here, right, are trademarks of range. And then of course we started getting an expansion on this day, so the value area expanded here. It held the pullback this morning, and the value area is expanding here. So when we talk about high-low midpoints, I usually am referring to high-low midpoints of the day's range. One thing you want to also reference is the high-low midpoint of the value zone. In this case, in this chart, it's the grayish area. So you can see here, this day value expanded. Okay, so these overlap. So this is an overlap. Overlap value, right over here. So that equals range. And then in these days, this day, right, this day, right, expanding, right, value, trend. Okay. There was a little bit of overlap on this one, then it expanded yet again. Okay. And then this became overlapping. And that equals what? Range. And then here it is, expanding value. Equals what? Kind of trend condition, right? And the same thing here, right? We have expanding value. So pay attention to value. Why value is more important than the normal range of a day? Very simple. It's because 70% or 68.2 to be exact, I just rounded to 70% of the day's activity